Hey guys, it's Dave. Welcome back to the channel. Today I'd like to talk to you about Tesla. It is the biggest single company I have in my portfolio. One of the reasons I feel comfortable investing a bit more in them and say Rocket Lab is Tesla's already profitable as opposed to Rocket Lab still trying to push towards that profitability. And I really just wanted to go over today why I hold Tesla, why I feel comfortable doing it, even though the stock has been absolutely hammered over the past year, even really 2 years plus. And just go over my entire investment thesis on why I've decided to invest in it, and I believe it is a good stock to hold for the long term. As always, this is not financial advice or investment advice. You need to do your own research, make your own opinions up about the company. I'm just sharing some of my research and why I have come to these conclusions. So with that, let's dive into it. So when you see a lot of videos about Tesla and the stock on YouTube, you see a lot of this stuff, and I just wanted to say I'm not here to talk about any of it. So I'm not here to talk about Elon's latest tweet, what he said, is it crazy, does it make sense? I'm not here to talk about the Twitter purchase, should he have done it, shouldn't he have done it? Is it going to go out of business? What's going on with Twitter? We're here to talk about Tesla. Not here to talk about whether Elon will need to sell more shares over the short term to fund his Twitter purchase. It is possible, but this is about the long-term thesis of Tesla. We're not here to talk about market manipulators, whether shorts are trying to drive down the stock, whether they're trying to make you think Elon has sold more by having those big orders of sales and then buying back. I'm not here to talk about even his politics, what he's been saying about elections or his latest haircut or any of the crazy stuff people talk about. I'm just talking about the numbers. So I want to tell you about how much Tesla is making today, how fast they have grown to get to this point, how fast we're projecting them to grow into the future, and what those future earnings are worth, at least to me, in my opinion. So just the numbers, the bottom line, the long-term trajectory of the company, not all this kind of noise around it that gets so much attention these days. Let's look long-term at the actual numbers here. If you follow investing closely at all, you've probably seen a graphic like this at some point, maybe not exactly like this, but pretty similar. I don't know when this one was made, so the market caps may vary a little bit. I do know that right now Tesla is actually down around $530-ish billion in market cap, so that probably you could cut off a little chunk from the top of it, but nevertheless, it still has much larger market cap than a lot of these legacy automakers. And I'm not trying to deny that or say that this isn't true. It absolutely is true. And on the face of it, it may seem crazy to you. Why would you invest in a company with this kind of a valuation when these other companies, which are still putting out more cars than Tesla, by the way, are trading at a significant discount to Tesla? I'm not denying it, but really, you got to think about this, what's going on. There's no way retail investors are just pushing Tesla up to, at one point, $1 trillion market cap as a meme stock type thing, like a GameStop. Retail investors just don't have that kind of capital available to them. So there are a lot of institutions in Tesla, and what's going on? Are they all really this crazy that, this makes absolutely no sense and everyone's crazy, but they've still pushed this company up to $1 trillion market cap at some point? Maybe there's a little bit more to the story than just how this graphic makes it seem on the face of it. So, just to give you a little bit more data on the TipRanks analyst consensus, we have about 29 analysts covering Tesla. The average one-year price target is $310 per share, so that's significantly above where they're trading right now, up closer to that trillion market cap level. So do you think all of these analysts with these price targets are just crazy? They see this and they don't care, they ignore it, or they don't know about it? Believe me, they all know about this. So what's going on here? Let's look into this a little bit more. Well, first of all, this chart comes courtesy of James Stevenson. He runs a YouTube channel as well as a pretty entertaining Twitter account. He's I Cannot Enough. I'll be sure to link him in the description below. Feel free to check him out. He makes a lot of great charts. But I'll just show you this to start off with. And yes, look, Tesla is still making today less cars than GM and Ford. But what's the trend here? The trend seems pretty clear that from 2016 down to 2022, we're on a bit of a downward trajectory, at least for GM. We have a bit of a pop in 2022, but overall it seems like a downward trajectory. Same thing for Ford in terms of global deliveries of vehicles. Tesla, we're on a nice upward path here. And if you really zoom in, you can see that this is exploding extremely rapidly. So like, are you paying for the company because they've made more cars in the past, or are you paying for what they'll do in the future? I want the company that's going to do better in the future, that I believe will outperform in the future. And I don't want to get caught in a value trap just because in the past they have sold a lot more cars than Tesla. This is rapidly changing. And if Tesla's goals for continued production growth continue, they're going to get a lot closer and closer to these companies, perhaps even past them one day. So that's just an interesting chart I wanted to show you. Maybe the numbers seem a little bit less crazy now, but let's keep going. Tesla also keeps a lot more revenue from each vehicle sold compared to these other car makers. So this is just from one quarter, and these numbers may vary a bit, but at least in this quarter, adjusted EBITDA margin on Tesla was over 20%. GM, we're looking at about 6, and I think Ford was about 8 or so. So for each of those vehicles sold, those companies are keeping less of the money. Less of it is actually flowing to the bottom line as profits compared to Tesla. So as we ramp further, it's just more and more money. And if Tesla even is just even with these companies in terms of production, they will severely outpace them. At least if these numbers stay the same in terms of margins, they'll severely outperform those companies in terms of profits. Continuing on, another one from James Stevenson. We're looking at net income. So obviously, this is how much money the company's making, and we can see, okay, GM's been fairly flat. They had one bad quarter, but really flattish to downish. Ford, we're kind of bumpy all over the map, but I wouldn't say this is a clear upward trend. This is over from 2016 to 2022. So we're not looking at only 1 year. Like, this is a pretty long-term chart here. And what we're seeing from Tesla is, yes, they were unprofitable for a while. They had to spend that money to ramp up their production, not unlike Rocket Lab is spending that money right now in order to be able to make more in the future. But they hit that profitability, and now we're just kind of exploding up at an extremely fast rate. So the net income numbers here are looking pretty impressive for Tesla, and we kind of expect this trend to continue. So even if they're more expensive today, I want to be on the side of the growth, not on the company that, okay, for what they made today in terms of cars this year, sure, they're much cheaper than Tesla, but where's the future going here? That's what I'm really thinking about. Continuing on, okay, sure, Tesla's growing, but surely it's still too expensive when we're looking at these crazy market caps, $530, $560 billion. It's a lot of money compared to all those other car companies, as we saw previously. But what's kind of been going on in the background here? So earnings, as we saw, have been increasing over the past several quarters. We did have a bit of a dip for one quarter here, but we're seeing steady increases. Meanwhile, the stock price has really been collapsing for the last couple years, even maybe 2 years or so. We really peaked, I believe, down around 2021, late 2021. And I will say, I did feel personally that at these high heights, Tesla was getting overvalued. I mean, I don't try to deny that. I think it was getting a little out of control with the hype. I actually thought about selling for a while because the valuation was so crazy, but I didn't end up doing it because I'm a long-term investor and I usually like to buy and hold companies that I like. So maybe you can say I made a mistake there and I should have sold, but holding for the long term, I think, is overall the safest strategy for most investors, and that's what I did. And so while you have a combination of growing earnings and lowering stock price, we're seeing the price to earnings ratio get absolutely crushed here. We were almost at $1,500 in terms of price to earnings, We're now at 52.5. That is a massive decrease over just 2 years. So this trend can continue. There's room for this price to earnings ratio to keep getting compressed lower and lower. But at a certain point, it just won't make sense for a company growing this fast to have that low of a price to earnings ratio. It will be forced to go up, at least in my opinion, if they keep up this rate of growth. And frankly, 52 is not that crazy for a tech company even today, really, at least in my opinion. Now, we're also looking at a forward PE of only 34.6. And this is based on analyst expectations for next year. So that's only 1 year out. If Tesla's stock price stays flat, then we're looking at a price to earnings of 34, which is rapidly decreasing further and further, getting closer to those levels where it just starts to look stupid, and it will have to move up because the earnings justify it, which is what I really care about, not about all that other stuff in the news that I was talking about previously. So I do believe that eventually, if the growth continues, the margins stay as they are, earnings will force the stock price higher. It's just a matter of time, as we've seen this trend just absolutely crush the price to earnings from where it was admittedly probably quite overvalued. So just some comparisons of price to earnings to kind of show that we're no longer at those crazy ratios that we were a couple years ago. I think a lot of people think of Tesla and they remember a couple years ago when, yes, these ratios were absolutely insane. They did get to those levels, and a lot of people just haven't really looked into it very much since and just continue to write it off. But we're looking at a price to earnings ratio today for 52.5 for Tesla, Microsoft 26.4, and Amazon actually up at 86. So in terms of this ratio, Tesla looks cheaper than Amazon, and you could make the argument that Microsoft looks cheaper than Tesla, but then you have to look at growth rates. Generally, investors are willing to pay a higher premium in terms of price to earnings if the company is growing at a faster rate. So the faster a company is growing, the more you're willing to pay because you expect that those earnings will eventually justify the premium you're paying. So in 1 year, according to analyst expectations, we're looking at a forward PE down to 34.6, and that is actually getting closer and closer to Microsoft, whose forward PE, according to analyst expectations, is actually going to drop down to 25.91. So that's being crushed much faster than Microsoft price to earnings. Just kind of goes to show the growth rates, and same sort of thing with Amazon. Their forward PE, we're looking at 83.07, which is dropping much, much more slowly than Tesla at this point. Now, of course, these analysts could be off, but they do this for a living. They're not always perfect, but these projections, a lot goes into them, and this is kind of the best guess for these analysts. So really, this price to earnings ratio is being crushed extremely fast. It's not that out of this world for a tech company, and I think very soon the earnings will really be undeniable if the trend continues. So then you have to ask yourself, is the growth going to continue? Well, Tesla management has been guiding for an average of a 50% annual increase in production, and they've continued to reaffirm that guidance for several years now. Now, this is another chart from James Stevenson, linked down in the description, as I mentioned, and these are quarterly delivery numbers, and we're seeing that back in 2018, they had quarterly numbers of maybe around 100,000, and they have been exploding. They've been managing to hit that 50% annual compound growth rate in terms of vehicle production and deliveries. So we're seeing that go up to right now. We're looking at about 400,000, which is extremely impressive. And these are projections, but if they get anywhere close to this, we're looking at extremely, extremely high numbers of deliveries. If they can continue to hit that roughly 50% annual growth rate, very impressive for any company. Usually, as companies scale and you sell more and more product, margins will improve. So potentially it could get even better as these numbers get higher. There are, of course, going to be risks with any company, though, so I'm not going to say there's no risks here. We could talk about potential margin compression. So as we saw in that previous slide, they're making a lot of money off their cars, high margin compared to their competitors. it is very possible that they may have to cut prices. Their costs for production may increase. I don't think this is too likely. They did have a price cut in China recently. There does seem to be a bit of demand softness in China. Demand is very strong in the rest of the world, though, and they're implementing a lot of new manufacturing techniques that are actually reducing the cost to manufacture one of these vehicles. They've got new battery cells. They've got new structural battery packs where the battery pack is actually part of the structure of the car and not just something that gets carried around. And they're doing a lot of things to actually make it cheaper to make these cars, not more expensive. But that could potentially be a risk if their supply chain gets more expensive. Other things happen. Their margins have to compress for whatever reason. Demand softness, I did mention it would go to price cuts, but we have seen a little bit of that in China lately. I'm not going to deny that. And as we're exploding our production, you do have to wonder, okay, well, how much demand is there in the market that they can support for these expensive cars? And we will see them make cheaper models eventually down the line as well. So that could be a potential concern. Right now, demand is looking pretty good. They're still selling every car they're making, but you could worry in the future as a potential risk. China's zero COVID policy has been a big pain for Tesla. They had to shut down their biggest factory in the world in Shanghai for a significant period of time because of China's COVID policy. If this happens again, it would be a big blow to the company. It'd be very difficult, but so far they've weathered this pretty well. It is a concern, though, as well as just geopolitical concerns with China. Tesla is one of, I believe, the only American companies to own their own factories in China as opposed to having to do some sort of a joint venture with a Chinese company. So if there's any kind of geopolitical issues, some fighting over tariffs, even issues around Taiwan, if things continue to escalate between the United States and China, you could potentially worry about that causing problems for Tesla and their exposure to China. So that's another thing to think about. Of course, with any company, there is risks. I've kind of weighed these, and I feel like I'm still okay with my investment overall. So there are some potential bonuses I didn't even talk about. All I've talked about so far is cars and how many cars they're selling and will continue to produce in the future and the growth rate on that. But there's a lot more potential avenues for growth in the future. So first of all, full self-driving, I know it takes a lot of heat. A lot of people have different opinions on it. Not going into that, all I will say is it's a $15,000 piece of software. Who else is selling $15,000 of software to the public, to consumers, not to business, but to the public? Pretty much nobody. So any amount of increase in this, in terms of the number of cars you're selling, the people who are purchasing this option, really flows directly to the bottom line because there's no hardware costs around it. So if self-driving continues to improve, they get more people purchasing it, they see the value in it, then that could really actually help margins even more and could be a massive boon to the stock price and just the company's balance sheet as a whole. As well, their solar and their grid storage could continue to grow. They're starting to focus more and more on the energy side of the business lately, so that's a section that hasn't gotten as much attention as the cars, but we could see that continue to grow and expand even more in the future as well. Further down the line, I would say, I'm not one of the people that's going to say we're going to have a robotaxi network next year or anything like that. I think clearly that's not the case, despite what some people may say. However, if further down the line we get full self-driving solved to the point where these cars can drive themselves, go around, pick up people on their own, that's just a cash cow here. This is just absolutely insane. And I will say, even though I don't think it's next year, probably not even the year after that, or, it'll be a while still, despite what some people may say, I do believe Tesla's in the lead here, and it's a problem that will get solved eventually. So being in the lead and having that as a potential bonus could be absolutely huge over the long run. Very distant future, their humanoid robot they've talked about. I'm not going to go into that too much, but obviously there could be a massive market for these robots performing labor. This is way down the line. I'm not going to think about any revenue coming from that for the foreseeable future, but it's at least goes to show that they're thinking about the future. They've got future product lines. They're not just going to be a car company forever, which today, yes, they mostly are. Most of their revenue is coming from the cars. Of course, I'm not going to argue that. Tesla Insurance is another interesting area where they can gather a lot of data from their cars around your driving habits if you opt in and you will allow them to access that data. They can see if you're a safe driver, offer you cheaper rates, or if you're an aggressive driver, charge you more expensively. And it's quite interesting to see them move into insurance and see how that impacts their bottom line, and they're able to make revenue from a completely different area of the market. I mean, think about it right now. So we have the manufacturing of cars. We have the software for full self-driving. They're an insurance company. They're a gas station, quote unquote, for their charging. So yes, we compare them with these other car companies, but they do a lot of other things, and they're continuing to expand. Solar and grid storage are getting more and more important. And so charging network, we're going to see those revenues increase, as well as service revenues for their cars, because they do that all themselves, whereas most of these other companies, the service is done by your dealership, and that revenue is also not captured by the car company. So just some other potential bonuses that could be a potential cherry on top in the future. So that's my short little pitch for Tesla and why I think it is a buy today. And if I did have the free cash, I'd probably buy some more, which I don't, unfortunately, but I am still holding. I've been holding for many years. I've had a great return on it, and the company has still been performing very well, regardless of all this short-term stuff in the news, all this stuff about Twitter. Really, I just want to talk about how much money I think they're going to make in the future, and that's it. That's all I really care about. I hope I may have convinced you, Jakester, from the Discord. I know you were saying that you think Tesla is still a little expensive here. Let me know your thoughts. Maybe it is. Maybe I'm wrong on this, but to me, it seems like a good deal at these levels right now, and I would buy more if I could. So that's it for today. I hope you enjoyed this video, and I hope you have a great day. Thanks. Bye.